Good morning, everybody. Welcome to Market Outsiders. My name is Namaan, joining you from Austin, Texas today, joined by my colleague Jenny Rae in Northern California. And we are here to kick off today just a daily business news segment that we will be running almost every weekday at 9:15 a.m. Eastern. And the goal is this. There are a ton of headlines out there. There are a ton of hot takes out there. Our goal is different. It's not just to bring you the headlines, you've got the news for that. It's not just to give you hot takes, you've got social media for that. The goal is to give you clarity. So, what we're going to do is every day for 15 minutes, we're going to break down two of the day's biggest news stories through a sharp business focus lens. And the goal of these segments is going to be to help you understand which economic indicators truly signify economic health and which are just noise. If I could just summarize the goal of our time together, it's going to be this. It's going to be to separate signal from noise and help you focus on what matters the most. And so let me just very, very quickly walk you through how we're going to structure this time together so that you know what to expect when you join us every morning. So, what we're going to do is we're going to highlight key economic signals hidden within news stories. We're going to decode what these indicators actually mean for markets, for businesses, for consumers, and for the decisions that you're making every day. And our goal is to leave you smarter, sharper, and more confident in interpreting what's happening in the world around us. So, whether you're preparing for case interviews, whether you're running a business, whether you're just interested in what's happening in the world, the goal is that you leave smarter after just 15 minutes with us and we all learn together. And so, whether you're a business leader, an investor, an entrepreneur, a student, this segment will apply to you. What we're going to do is we're going to spend the first 2 minutes of every morning just introducing the daily economic sentiment. We're then going to break into the two stories that we're going to interpret and cover. And then we'll end with some key takeaways in closing. We'll be in and out in 15 minutes and get you to your next cup of coffee. So, with that introduction out of the way, Jenny Rae, I wanted to throw things over to you so you could add any additional context you wanted to, and also kick us off with our first insight of the day.
Awesome. So the main thing that I just want to share is that the economy is not the markets, and the markets are not the economy. That's going to be one of the big premises of what we'll talk about on this. The markets do represent approximately 50% in the US of equities, but there are private equities held by large private companies, and there are also small businesses. And one of the insights that started this is that we cover at Management Consulted in our research department the large and very private consulting sector. And we see different indicators in the consulting sector than often public equities see. And this is, we believe, a leading indicator of what's happening inside the market. So I think it's going to be really important for us to tease out specific language. Today, I'm going to highlight the news from Adidas. So Adidas warned this morning that it will raise prices on all US products due to tariffs. And that seems like a normal headline, right? So Adidas said, this is what we're going to do. The tariffs have caused us to raise prices. I think general economics would identify that when you add tariffs to something, it adds a cost that the production manufacturer or the reseller has to pass on to the end consumer. But what I thought was very interesting was to think about another metric that I would care about more when I'm thinking about valuing a stock, running a company, and that's actually the mix of production. So if you actually kind of dig into the headlines, this is just from CNBC. What they said is that that the news on tariffs would eventually cause it to raise prices on all US products. So there's a timing element here that I think is very important. And they also said that they were unable to confirm how much they would be raising because they have key suppliers in China, Vietnam, and Cambodia. So, what really will end up mattering is not whether or not you have international production, but specifically where and how much that international production is. So, if we have different tariff rates in China, in Vietnam, and in Cambodia, and then also you have this flow through to entirely different end markets, you'll see really different price increases. But what I thought was important is that they're already flagging that they will be increasing prices regardless of whether tariffs go away. So the combination of the fact that that Adidas is saying that they're going to raise prices before they know how much or when, that they're saying they're not sure how much because they're not sure what the tariffs will end up being on certain items, but that means that they have limited flexibility in how they're going to price through, right? They can't just kind of pass on prices to their retailers in single moments and change them in the next moment. And they're expecting to simply increase prices based on what they believe is somewhere around the moderate to worst case scenario. Running these models at Bain, I saw exactly that, right? We couldn't price based on what we thought was the best case scenario. We had to price based on either a moderate or a worst case scenario. And that's really the underlying issue that Adidas is flagging in the news today. Over to you,
And it's
Naman.
not, yeah, and it's not just happening at Adidas, it's happening across industries. The Wall Street Journal broke the story this morning that, companies are trying to hold the line on price increases as much as possible, but they are saying across industries that they are not going to be able to hold the line for much longer. And that is partly due to uncertainty because of tariff policy, but like you said, it's not just tariff related, it's just macroeconomic environment related. And so no matter what directive comes from the White House here in the next few weeks, I think we can expect prices to go up. I also just wanted to mention, I 100% agree with you. The stock market is not the economy, and the economy is not the stock market, but they are related, right? The economy drives the market, and I think actually stock market activity sometimes drives economic activity as well. And so, one thing that I'm excited to unpack on a future episode is the relationship between the market and the economy, but they are not the same thing. And I think one of the things that you see when you read business media is people treating markets news like economic news, and it's very misleading. And to that point, the story that I wanted to unpack is just around the cost-cutting measures that companies across corporate America are undertaking right now. And there's, I think, a lot of fear of layoffs. There's a lot of fear of doom and gloom when you see that companies are cutting back on travel. They're cutting back on some of the fees that they pay their service providers. They're, in some cases, even pausing hiring. But the economic indicator that I just wanted to talk about today is broad unemployment, because it's easy to see the news around slowing business activity and think that everything's going to hell. And when I look at the US economy, I actually see a fairly healthy economy in the moment. So this is a snapshot on April 29th, but our unemployment rate today is 4.2%. We are close to full employment in the US economy, and 70% of US GDP, that's US economic activity, is driven by consumer spending. So as long as people have jobs, they will continue to spend. And as long as people will continue to spend, the economy will continue to maybe not hum along at the pace it has been humming along, but we'll see, instead of a recession, maybe a slowdown. And so, with the time that I have today, I just wanted to level set everybody on what I think is the number one kind of metric and indicator of economic health in America, and that is unemployment. And the reason that it's unemployment is because so much of our economic activity and so much of our GDP in a services-oriented economy is driven by consumer spending. And so, do I pay attention to other metrics? Absolutely. Do I take it seriously when companies tell me that they're cutting back spend? Absolutely. But until I start to see large-scale layoffs, I'm not super concerned. And could that be the next domino to fall? It absolutely could. But big picture, what I'm looking at in the aggregate is US unemployment. And as long as the unemployment rate stays at that 4% range, I don't think that the US economy can tip into recession. And I think that's an indicator that the economy overall is in fairly good shape. So, January, we've just got a couple of minutes left before we wrap up our time together. Any key takeaways or maybe even next steps you wanted to share with the audience before I do the same?
So one key thing that I just want to highlight is that when I was serving at Bain, I always defined the work that we did as answering the top questions that CEOs were asking. And I would actually say that right now the role of a consultant advisor is larger than that. I think it's actually answering the questions that they should be asking, but maybe aren't. And that's really one of my goals during this time together. I think we were kind of simultaneously comforter in chief, explaining that what they saw happening in the market in the micro was not going to affect their business in the way that they maybe thought, and also kind of I guess big picture thinker that was going 1 to 2 years beyond where anyone in their organization was thinking. Somebody else was putting out a quarterly report. We were thinking 3 to 5 years down the road, and the role of those two things is really where we're going to go here. Naman, I just want to ask you, I don't know if you know this, but if not, we could bring it on tomorrow's episode. Is unemployment a daily metric? I think one of the reasons that people love public equities is that they're daily metrics, right? You see this constant trading activity, and it gives you an indication of today on Tuesday where people are. But when I was looking it up, actually, it was kind of funny this morning because one of my metrics that I'll highlight tomorrow, it said it was reported on May 2nd, 2025. AI told me that it was reported on May 2nd, 2025, because it's a monthly metric, right? So it comes out. And I'll probably highlight it tomorrow and then bring it up again when the new report comes out. But can you just explain a little bit about that, either unemployment and unemployment methodology, or just whether those are daily, if you know them, and if not, we'll bring it up
Yeah.
tomorrow.
So unemployment rate is monthly. I think the methodology is stuck in 1970, right? It's the Bureau of Labor and Statistics that is calculating the unemployment rate by methods that I'll get into on a future call, but they're pretty archaic in terms of how the government puts unemployment numbers together. I think they're a good proxy, though, for the strength of the economy and the labor market overall. It is a monthly metric. That's actually one of the reasons I pay attention to it, because it's so easy to get lost in the swirl when you look at daily metrics. And I think that's one of the reasons why people freak out, is because, somebody goes on CNBC and makes a comment, and all of a sudden the markets are down 2%. And it's not necessarily reflective of economic health, it's reflective of sentiment. It's reflective of where certain companies are. It's reflective maybe of certain earnings expectations, but it's not necessarily reflective of where the economy is today. And so if you want to freak out, by all means, like, follow the tickers all day, every day. If you want to take a little bit of a longer term view, right, that 3 to 5 year view that you were saying that you brought your clients at Bain, I think it's helpful to zoom out sometimes and, yes, pay attention to daily metrics, but also take a look at what's happening more kind of more cyclically, and then decide, okay, are these cyclical trends or are they secular trends? And if they're cyclical, I pay less attention to them. If they're secular, I pay more attention to them. And I think you can only get that with the benefit of time. And so that's why I pay attention to unemployment as a key metric for myself. Stops me from freaking out. And if I see that and I do freak out, then to me I'm like, okay, it's more justified than if I'm freaking out because the S&P is down 2% on a particular day. Looking forward, January, what I'm going to be paying attention to this week and in the weeks ahead is really consumer sentiment. And so I think, consumer confidence and consumer sentiment can be a leading indicator for where consumer spend is going. And if that's 70% of our GDP, that's the one metric I want to pay attention to if I care about just kind of the economy at large. And so if we see that, consumer sentiment continues to decrease in the months ahead, if we see that, trade policy is going to inflict greater pain in the months ahead, right? Then if consumer spending goes down, that's going to cause, corporate earnings to potentially go down. If corporate earnings go down, that's when, they start to tighten their belts a little bit more. That's when you start to see layoffs. If you see layoffs, then of course consumers tighten their spend even more, and it becomes this like unvirtuous cycle. And so I think one of the leading indicators that will kind of clue us in on if that's coming is going to be consumer sentiment. And I'll be interested to see if what people say about the economy matches their action, right? If they say that they're scared, but they continue to spend, or if sentiment actually aligns with action. That's one thing I'm going to be looking at in the days and weeks ahead.
Can't wait. Well, it'll be fun to come back tomorrow, and there will be new headlines, new news, and new market indicators for us to look at. Thanks so much, Naman. Enjoyed
We'll see
this.
you tomorrow.